welcome everyone. We are here with our SRI, Socially Responsible Investing, or ESG, another way of describing this. And I'm here today with Robin Freedman. Robin is a portfolio specialist at Clearbridge Investments. She joined the firm in 2010. She's almost celebrating her 10th anniversary and has been in the investment business for over 13 years. We just caught up that she actually was within Lehman right around the crazy times back in 2008 and has since transitioned over to Clearbridge. So she's part of the SRI team, Socially Responsible team, and she's going to help us to understand a little bit more about socially responsible investing, what it is, what it isn't, and how her firm specifically actually handles the actual vetting of different companies when it comes to socially responsible investing. So welcome.
Thank you. Thank you for taking the time to watch us and listen to us today.
All right, sounds good. So first, before we get started, we have this nice fancy disclosure at the bottom that this is all educational in manner. I'll read it verbatim. Opinions voiced here are for general information only, not intended to provide specific advice or recommendations for any individual. There's no assurance that the techniques or strategies discussed are suitable for all investors and will.
by putting smart funds out there, more people in the public, whether it be in the U.S., emerging markets, are able to communicate with each other and really open up the world to that different way.
Right. So skepticism. This is something that, I asked all of my clients. I said, on the socially responsible spectrum, how important is it to you to pretty much get the best rate of return you possibly can and not really worry about where those profits are actually coming to? You'd be willing to actually sacrifice a little bit of performance in order to know that the company is trying to do good by people. So there's a lot of skepticism there, because I would argue that probably about 2/3 of my clients would actually go with the first one and say, listen, I just want the best rate of return I possibly can get. And when I make all that money, maybe then I'll give to charities and things like that. It doesn't necessarily need, I don't necessarily.
I have a microphone turned. How could I turn that off? That's annoying.
Means something different. It's not something that's hard to deal with, but I think with the times are changing, and it's starting with Europe, and it's going to come here as well, where we have actually seen on the institutional side, so these are endowments and trustees, where they are looking to be investing ESG, and then retail, so individual clients is how we consider that. It's something where more until recently, you had it where clients were the ones that were bringing it up to advisors. And, I think there's been more of an importance of more of a knowledge education. And that's what this is today, is that ESG is something where we think that, you can't say it's a barrier for asset owners. It's going to be very important over the next, really 10+ years.
Yeah, it's funny you say that, and some of the things that you just mentioned a moment ago really echo with me, because I actually have an attorney who's if he watches this, I want to make sure I don't say anything bad about him, but he has kind of that old school mentality that handicapping a portfolio, that using ESG handicaps a portfolio. And so his fiduciary responsibility is to not handicap the portfolio, and therefore he has told me very explicitly, this is not a strategy I want to consider. What you're actually saying is that in some situations, the ESG consideration is actually a key component of their fiduciary responsibility.
Yeah, I talk a lot to advisors who are newer to talking about ESG and how can I bring it up with clients. And I think it's something where you don't force a client into any portfolio, similar to anything else you're doing, but just starting the conversation and asking about what they're interested in, or are there any values you want to put into your portfolio? And if there's someone who says, no, I don't want to talk about this, then you move along. But just entering into the conversation, I think, is important.
Sure. Okay. Talk to us a little bit about the trends. So obviously, I don't think it surprises many people that millennials and younger people would be very attracted to this. So talk to us about this slide and some of the people that have the most interest in what they actually like.
We had done a survey about 2 years back that was looking at high net worth clients and millennials and the interest of what does ESG appeal to you. And the survey wasn't very surprising to us, but I think it was probably for a lot of people, was that it holds very high appeal for high net worth side, but especially millennials, where almost 90% were interested and learning about ESG and that concept of ESG. And what I thought was, very interesting was, if you look at towards the bottom, where believe ESG investments are likely to perform as well or better than non-ESG, you had almost 75% on the high net worth side and 84% on the millennials, and informed about ESG from their advisor. And it's been something where they have been bringing it up to their advisor by learning about it from self-directed research or by the press. So I think that there's this huge wave that hasn't come yet, but based on that education I was talking about, that high net worth clients and millennials are very interested in hearing about ESG, but it's really about getting that access through their advisor or through some self-directed research.
So sounds like the key to this slide for me is make sure I keep mentioning this to people, because it doesn't look like many advisors are actually bringing this up to their clients.
Yeah, I think that millennials are discounted in a way where people see millennials as younger, but millennials are starting to age. They now become a bigger population than baby boomers. But especially it's important because if you think about, everyone talks about that transfer of wealth that's going to be happening between the baby boomers to the millennials. And millennials are very interested to hear what they're investing in, what the companies that they're investing are doing. So, by involving them earlier on and getting them educated, I think that's something that we look at.
Yeah, and again, anecdotally, I see that all the time. The younger they are, the more, when I have that conversation with people, they actually do say, yes, I'm very interested in making sure the title of our presentation is putting their money where it's. Okay. Any other things that you found from that survey?
So the prior slide was about looking from the client experience. This slide is more from the advisor experience. The top one is that nearly 90% of advisors cite that the ESG investment discussions are initiated by their clients, which of course is not the case today since we're doing a webinar on ESG. And then, 90% of advisors' clients indicate that they don't believe that ESG options carry more risk. So that fiduciary duty advisors are really debunking it on this slide.
Got it. Okay. And this slide doesn't really surprise me that much, is how much of what parts of the country are actually embracing this. But folks are address this.
Callan, they had done a survey. So Callan is a big institutional presence. They're based on the West Coast. They had done a survey that looked at all different regions of the country, looking from 2013 to 2019, looking at ESG adoption rates, and excluding the middle of the country. All areas of the country have increased in ESG adoption. I was actually, an anecdote, I was in Houston, Texas in the fall. I was told, you don't really need to bring up ESG. They're really not interested in the oil center of the country. And I actually just asked, do you ever get clients that are interested in ESG? And it was actually a yes. So, if areas like Texas can grow in ESG, I think that there's hope for the rest of the country.
Got it. Okay. Makes sense. All right, so this is one of my favorite parts of the whole ESG story is the impact. I actually wrote a blog article a couple months ago about my daughter who participated, and I think it was September in the Boston climate strike. She wasn't there, but she was the one that kind of spearheaded the climate strike. And as much as I was proud of her for participating in it, I also kind of gave her a little dose of reality from her dad, just simply saying, it's great that you participated, it's great that you helped, you made, pretty signs and everything, but I'll be honest with you, I don't think much is going to happen with that. And this is where I love the ESG story, because it's really, using capitalism. Ultimately, these companies will start changing when it hits them in the pocketbook. And so that's why I love about this is that, you have kind of two stories where if you give money and give most of your money in investing dollars towards these companies, it allows them to, it's a snowball effect. They can do more good with that money. And on the flip side, if you're just kind of blindly giving money to, let's say, again, the S&P 500, not only are you, helping the companies that are not ESG, interested in ESG metrics, you're also somewhat endorsing them, by just blindly saying, hey, you know what, I'm just going to give my money and just let it do what it needs to do. So I love the concept of actually creating change with how you're investing your dollars. So why don't you talk a little bit about that?
I think that with clients or just individuals, it's how do I get started? If I invest in a stock, I don't have any impact. And that's really what we try to talk about, is that you can make an impact by investing in stocks. That and part of being with a manager who's done this, it's, we pool clients' assets together, and that's how we're able to make an impact, by putting those dollars to work. And if you think about the types of companies you're investing in, my favorite is talking about, investing in companies that their end product can benefit society. So if you can invest in a biotech company that's working on a cure for Alzheimer's, or they're coming out with treatments or cures for unmet medical needs, I think that's something that, people don't think about in the day-to-day, but that's, what an impact that is that, by you investing your money there, that you can potentially come out with a life-changing cure for something.
Mm-hmm. Yeah, no, it's huge, and I absolutely agree with everything that you just said. That this is how you really make change happen, hitting these companies in the pocketbook, and I think you're starting to see that a little bit. Like especially with the oil companies, you're seeing. I think it was, whether it was a Super Bowl ad or just a recent ad by one of the oil companies, they were talking about how they were changing the world better and kind of looking at alternative ways to use oil for good, and that seems a little bit of an oxymoron, but they're branching into other industries so that they can diversify, because let's face it, oil is probably going away. It might not be in our lifetime, but we'll see. And these oil companies, that's their only product, then they could be going the way of the dinosaurs, and they have to diversify. But talk to us a little bit about Clearbridge specifically. So kind of boots on the ground, a manager like Clearbridge, what do they actually bring to the table that the individual investor can't do?
So Clearbridge has the experience where we've been doing this since 1987, where we started our first ESG portfolios. And I think that there's a few different ways that different firms will do it. So, there's one model where a firm will use a third-party researcher they'll take their portfolio and screen out names. There's maybe a model where there's a segregated ESG team that deals with company meetings, and there's also going to be another person who will talk to CEOs. And from Clearbridge's approach, how we've always done it, and we think is really the most prudent, is we believe in full integration throughout the firm. So we have 14 different analysts that work at our firm. That's going to be sector-based, so healthcare, technology, et cetera, where we're going to have one person, along with our portfolio managers, meet with company management teams and talk to them about, how is your balance sheet? What do you think the next quarter is going to look like? But we're also looking at ESG issues that are important within different industries. And we think that by having that done in one conversation, is really how you get the best picture of a company, rather than it being, these different conversations with different people within public companies.
So bottom line is, you actually have representatives at Clearbridge who will go to one of these companies, whether it's a Tesla, whether it's an Apple, whether it's a Microsoft, and actually sit down with board members and actually talk to them and say, what are your plans with your business model? How are you incorporating ESG into the mix? Is that pretty much what you're saying?
Yeah, so Clearbridge we tend to be very long-term oriented in nature, where on average, we've held a company at the firm for 7 years. We have $150 billion in assets, which we really do think that provides us access to companies where we have about 1,000 management teams that will come in to see us every year. And of course, we'll go to conferences, but, getting that access where, we believe that, a company wants to hear from us. They want to hear what we think, because they know we're not just looking to own a company for 3 months and then get out of it. We're really alongside the table of, what we think the company can be doing for us to own them for 5+ years.
So that's an interesting, and this goes back to the prior slide, is that this is where the individual investor can actually influence change, because I would imagine there are probably companies that you're vetting out right now that you go out and visit them and you say to them, listen, we love everything about you. You've got a great balance sheet, you're profitable, you're this, you're that. But from an environmental standpoint, this is where you kind of fall short. If you were to fix that, then it would definitely be something that would be on our list, and we can actually dedicate tens of thousands, millions of dollars towards you. Is that pretty much what you're saying?
Yeah, so we're going to give a grade to every single company at the firm. So every company that's covered by one of our analysts is going to get a rating anywhere from AAA being best in class, where it's really coming down to how is the company.
Pretty much this slide here?
Yes.
Yeah.
So how is the company really from its core putting ESG at the forefront? Where they're also creating a good that's beneficial to society, like we were talking about earlier. But then there's going to be companies that fall really to the left of that spectrum, where we're going to give it what we call a B rating, where it's flagged. So it's either in an industry that's unsustainable, like a tobacco, but it could be a company that really is just not just detrimental from an environmental standpoint, but not really thinking about good corporate governance. But this is still going to be a company that we'll meet with, because we're hoping to, by engaging them, that they are able to improve on some of these metrics. So, just because we give it a B doesn't mean we never talk to them again. I think as, Clearbridge, we pride ourselves on being active managers. So not to be confused with activists, where it means we're putting shareholder proposals forward, but active in that we are constantly engaging with companies on best practices and looking to help them improve on different ESG frameworks.
Got it. And I know this was a slide that you were particularly excited about. So talk us through this slide.
Sure. So when we talk about ESG, it's not going to be the same for all sectors. So, an energy analyst is going to look at the world differently than a technology analyst. And here we have looking at two different subsectors. So a retailer on the left, and then a software and technology services analyst on the right. And really just what they're looking for from a company from an environmental, social, and governance standpoint. And it is going to be different. So in the environmental, for a retailer, they're going to be looking at the efficiency of buildings. They're going to be looking at transportation. So that's a lot with, talking about Amazon, talking about Costco, and really that last mile. How are you going to get something from, a delivery unit to a consumer? Whereas a software analyst is really going to look at the efficiency of a plant, what type of waste are they using when they come up with products. And then on the social side, a retailer is we're going to be looking at, the hourly wages, supply chains, and versus software analysts. I think something that's been really a new realm has been social media and software, about how are they going to keep data security. That's something that we're engaging on with all of our technology analysts, whether it be within software and also the new internet and media space. And then lastly, corporate governance. This is something that's obviously important for all sectors, but looking at the retailer, gender diversity, board independence, and then on the software side, looking at that competitive behavior.
So needless to say, you're doing a pretty exhaustive review of all these companies. Got it. And I like this slide too. So I know I'm bouncing around a little bit, but this one here, this is pretty much putting into a quadrant figure here of how Clearbridge or any of these managers who manage from an ESG standpoint work with companies. So can you talk a little bit about this?
Sure. So on the top left, it's working with management as long-term owners. So going through the different ESG framework of, they'll a lot of times ask us if they have a lot of capital. What do you think that investors would be more interested in, a buyback or dividends? And then also looking on, the environmental standpoint of, what could we be doing from a plant perspective? And then once, when we work with management, I think all these kind of go hand in hand, is that, when we'll sit down with the company, it's, these are the areas that you can improve on. And while we assign a rating to each company, it's, this isn't something where we say a company is a AAA and then set it and forget it. That's just a baseline. And we're going to be, if there's a news event with a company, these ratings aren't stagnant, where if there's something that happens, that could warrant a model change, we're willing to do that. And that's also not to say from the other spectrum, by working with companies as long-term owners and identifying those key areas, you hope that companies can move from a B to an A to a AA, et cetera. And then lastly, focusing on ESG leadership, I think that being a manager, prudent financial management really should be the number one, whether it's ESG or not.
Mm-hmm. Got it. Okay. Well, I think we're winding down. Were there any other slides? I know I bounced around a little bit at the end there. Are there any other slides that you want to take a look at before we jump into questions?
I think those were probably the ones that I definitely think we should have highlighted. So would love to see what's on your clients' minds.
Okay. So let's open it up to questions. We'll spend a couple minutes, or we'll spend a minute waiting for the questions to start pooling in. That could be a title slide here, but yeah, so far so good. This is really interesting. I'm learning some stuff along the way. I think every single one of these webinars, I've learned a little something about everything here.
I think especially ESG is something that's constantly evolving. So, talking about how we started out, talking about all the different names that ESG has had, I think that, as more people get involved in ESG, this is something that's just going to continue to move along in importance, and, not just with individuals, but I think it'll continue to grow, and you have seen assets grow as well.
Got it. Okay. Well, it looks like we got one question that came in, and the question is, do you have any examples of a company that Clearbridge has been working with that, kind of a case study, of a company that may not have passed through your screens, but by working with Clearbridge, you actually have bumped it up to AAA to actually get that company to invest, or some case study example of some place where Clearbridge actually has kind of effectuated some of the change.
Sure. So there was a technology company that we've been working with that in that semiconductor area, where when we looked at, I kind of had used this example, but when we looked at how they ran their organization, it was incredibly inefficient. They were wasting a lot of money on servicing the plant, the water usage, and we were able to work with them of how they could redesign in order to become more profitable. And they wound up saving something like $5 million a year just on that, by able to putting those in place. But I think, a more interesting example more recently is we own a company, Discovery Communications. They did a merger with Scripps Network. I want to say it was probably about 3 years ago now. And if you looked at Scripps Network, so if anyone watches HGTV, I am a big fan of the channel. Makes me want to move all the time, but they had Scripps Network is very female viewership dominated. And if you looked at the merger of the two companies, and you looked at the board and how they were positioned, they didn't have a single woman on the board. And it's how can you be saying what types of shows that women want to watch when you don't actually have a woman represented? So we voted our proxy.
That kind of makes sense.
So we had the opportunity to vote our proxy, and proxy voting, I should have mentioned earlier, is something that's also very important as active managers, where we'll vote 100% of our proxies for our clients. We voted our proxy to have a woman added to the board, which was successful. And then the next year, we voted our proxy again to get another woman added, because you want to have that company represented better than it was.
Interesting. So again, you're putting your money where your mouth is.
Exactly.
And so, and I don't know if you know what. I don't throw curveballs at you here. These are off script here. I'm more curious about this. Of all the money that Clearbridge dedicates to the different companies that make up the portfolio, what's the largest shareholder percentage that Clearbridge has in any one or any one stock?
So that's going to really vary. I mean, if you're talking about a mega cap company, that's going to be much smaller. Right. But there are companies where we could be 12% shareholders of.
Really?
Yeah.
So it is that high. Mm-hmm. Okay, that's what I was wondering. So just with that example of voting the proxies, 12% of the votes. If that was the company that had that issue, 12% of all the votes could have been, we want more females.
Yeah.
That's fascinating.
Yeah, there are some companies we probably like to be bigger shareholders of, but we're capped at a limit. So to own too much of a company. Mm-hmm. But yeah, by 12% of votes, those tend to matter.
Okay. Well, it looks like those were the only questions that we had. So I think we're going to wrap up here. Any final thoughts, Robin, before we finish up?
I just want to say thank you for taking the time to listen to us today. If you have any questions, be happy to be able to filter those back to Clearbridge, and however we can best help you in your practice and conversation ESG, we'd be happy to help.
Okay, sounds good. Well, thank you everyone for joining, and I hope you have a great day. Take care.